Well, today I will be discussing about the accounting. Accounting is a accounting is a way of keeping the records of in financial transactions or business transactions, and it is related with this with the accountancy, that is a subject. So, what is accounting? Accounting is a language of business transactions. You know, in is nothing but economics is nothing but the science of human behavior, and it is related to the problem of choice. And problem of choice is related with the demand and supply. Demand for goods and supply of goods. Supply of goods is related with the company's behavior. So in a company, there is a system and production system where the goods are being produced. So if there is a production, so naturally there is a revenue and cost. And for production purposes, the company should buy something, and there is a cost, and company, after producing that product, earn money, and they get the profit from that. So the business transactions, the record of business transaction can be done by a language, and the language is important here because IFRS, the International Financial Standards Reporting, International Financial Standards Reporting. So on that basis, all the countries in the world can understand the financial statement of a company, because in this liberalized, globalized and open economy, a company is known to all of the countries, and the language should be done in such a way that each and every country can understand the financial statement. So accounting is nothing but the language of financial transaction or business transactions. For example, there is a buyer and seller, and buyer is demanding for a laptop, and a seller, that is a seller, is producing the laptop and sell that laptop. And for producing the laptop, for simplicity, I have assumed that it requires some electricity, it requires some ingredients for producing the laptop, and ingredients, for example, the hardware or software, and in this way. So if, for example, $100 is required for electricity, and for raw materials, producing the laptop is required, for example, suppose $1,000. And so if a person does not have any knowledge about the accounting, they simply write the information that in such a way that the company has spent $1,000 for raw materials and $100 for electricity. So if this type of entry is called the single entry, this type of entry is called the single entry. There is no principles, rules, and regulations are there. So, keeping in view the rules, regulation, and principles of accounting, there should be a double entry. And the financial transaction, business transactions are being recorded, So it is called the bookkeeping. And now, look, for example, I have mentioned that for producing laptops, the company requires electricity. So there is a payment for electricity. So if I like to keep these transactions, business transactions, in a book, considering the accounting procedures, principles, rules, and then we should write in a two ways. Always there are two ways for making entry in the book. So one is credit and another is debit. So there is some laws or rules regarding the debit and credit. And before I explain the example and following the rules and regulations of accounting, I would like to show one thing here. So these are the rules of debit and credit in accounting. So here is the types: assets, liability, equity, income, and expenses. These are the type. And if there is a increase in asset, here is the increase. So it should be considered as a debit. And if there is an increase in liability, then it is credit. In the same way, if there is a decrease in the liability, then it is called the debit. And if there is an increase in equity, then it is a credit. And if there is a decrease in equity, then it is called the debit. And if there is an increase in income, then it is credit. And if there is a decrease in income, then it is called the debit. And if there is an increase in expense, then it is in the debit. And if there is a decrease in expense, then it is called the credit. So at first you should remember that the cash is the asset. Okay, cash is the asset. So from this table we have a clear idea. If there is an asset and expense, if there is an asset and expense, there is an increase in the asset and expense, that is asset and expense, there is an increase, it should be considered as debit. It should be considered as debit. And in case of liability, equity, and income, if there is an increase, then it should be considered as credit. So with an example, I would like to clear the actual accounting entries. Look, here is an example. A business owner deposits $2,000 in a bank as equity. Okay, so this is the information, and actual accounting entries you have to make following the accounting rules and regulations and principles. And so I have mentioned that there are 5 types. One is the asset, another is the liability, and then there is equity and income and expense. So in that types, equity is there, I have mentioned. So equity, if there is an increase in equity, so it should be considered as credit. If there is an increase, so it should be considered as credit. And if there is a decrease in equity, then it should be considered as debit. So as by name, it is clear from the example, it is the equity. So equity increases. How much amount? $2,000. So if I now write in such a way that debit and credit, then, and I have write here entry, and look, here is the cash. Debit is the cash. Debit is the cash. There is a $2,000 has been deposited in a bank. So there is an increase in the cash. There is an increase in the cash. So cash is an asset. So there is an increase in asset. So if there is an increase in assets, then by the law we can understand that it is considered as debit. So it is cash and $2,000, and credit, there is an equity, and there is an increase in equity, and entry is equity here, equity, and it has increased, equity has increased, so it is considered as credit as per the rules and regulations, and here it is the $2,000. So this is the accounting entry. This is the accounting entry or bookkeeping, you know. So now I go to another example so that you can understand the accounting entry in the actual way. Now there is another example, and suppose there is a company, and the company for production purposes buy a furniture, and for that purchasing, the company paid out $500. Okay, $500 the company paid out. So by following the rules, furniture is an asset, and the cash that is paid out is called also an asset. So if you consider the furniture, then the furniture increases. Okay, asset increases. If asset increases, then it is the debit. It is the debit as per the rules, and the cash that is paid out decreases, then it is the credit. It is the credit. If it is decreases, then it is the credit. So by following these rules, I can entry these things in such a way. So there is an increase in the furniture. So increase in the furniture, increase in the asset, it should be considered, furniture should be considered as debit. So furniture, okay. How much money has been paid out? $500. So $500. Now cash has been paid out. How much amount? $500. So cash decreased. It has been decreased. It has increased. So if there is a decrease as per the rules, so the cash is considered as credit, and the amount will be the same. So $500. So this is the double entry, and by using the debit and credit, and if there is a buying of furniture by the company paying out some money. So now I like to differentiate between balance sheet and income statement. What is the difference between the balance sheet and income statement? Look, I have mentioned that earlier that there are some types such as the asset, liability, equity, income and expense. So here the first three things, that is the asset, equity and liability, these are considered as balance sheet. Together they are considered as balance sheet. And if we consider the income and expense, then it is the income statement. It is under the income statement. So now, for simple understanding, if I ask you that how much money you have in your bank account, then you should check your bank account on today, and you provide the information that I have 50,000 rupees in my bank account. So this is called the balance statement. This is called the balance sheet. It means that at particular point, how much money you have. Okay, so this is the balance sheet. And if I ask you that how much money you have earned during the last year, then you should find the whole year's income, and then you give the information, you provide the information. So in the income statement, it is related to the period of time. Okay, so here is the difference. Balance sheet is related to the point of time, and income statement is related to the period of time.